Gold is on fire. Prices have surged to new heights in 2025, leaving many investors wondering if this is the start of a sustained bull market. The yellow metal has always held a certain allure, a safe haven in times of economic uncertainty. But this recent rally feels different. It's fueled by a confluence of factors that suggest gold's appeal is broadening, attracting both institutional and retail investors alike. This surge in gold prices is not just a blip on the radar, it's a significant move that has market analysts buzzing. The question on everyone's mind is simple: how long can this rally last? To understand the potential of this golden bull market, we need to dig deeper into the factors driving its ascent. To grasp the significance of gold's current trajectory, we must examine its historical performance. When adjusted for inflation, today's prices might seem astronomical compared to the past. However, gold's purchasing power has remained remarkably consistent throughout history. This historical context is crucial. It reminds us that gold is not merely a speculative asset prone to volatile swings. Its intrinsic value has endured for centuries, making it a reliable store of wealth across generations. This enduring appeal is a key factor underpinning its current resurgence. What's driving gold's 2025 rally? Two words: central banks. These institutions are buying gold at an unprecedented rate, bolstering their reserves and diversifying away from the US dollar. This trend, known as de-dollarization, is a major factor boosting gold's appeal. Adding fuel to the fire is geopolitical instability. From simmering trade wars to escalating regional conflicts, the world is on edge. This uncertainty pushes investors towards safe haven assets like gold, further driving up demand and prices. Let's take a specific example to see this dynamic in action. Recently, the Bank of China made a significant purchase of gold, adding tons to its already substantial reserves. This move sent ripples through the market, signaling to other central banks and institutional investors that gold is a favored asset in uncertain times. This strategic maneuvering by central banks is not happening in a vacuum. It's a calculated response to the changing geopolitical landscape, where traditional alliances are shifting and the global balance of power is in flux. Section 5. The waning grip of the dollar. De-dollarization and the rise of gold. For decades, the US dollar has reigned supreme as the world's reserve currency, but its dominance is waning. Countries are increasingly looking for alternatives, seeking to reduce their reliance on the dollar and diversify their reserves. Gold, with its long history as a reliable store of value, is emerging as a prime beneficiary of this de-dollarization trend. As countries reduce their dollar holdings, they are increasingly turning to gold as a safe and stable alternative. Section 6. The people's metal retail investors jump on the gold bandwagon. It's not just central banks and institutions driving gold's rise. Retail investors are also jumping on the bandwagon. From seasoned gold bugs to first-time buyers, people are flocking to gold as a hedge against inflation and economic uncertainty. This surge in retail demand is particularly noticeable in East Asia, especially China. Gold has always held cultural significance in the region, and its recent price performance has only amplified its appeal. Section 7. Gold versus Bitcoin, a battle for safe haven supremacy. As gold shines brightly, another asset class is often mentioned in the same breath: Bitcoin. This digital gold, with its decentralized nature and limited supply, is vying for a place in investors' portfolios as a safe haven asset. The debate between gold bugs and Bitcoin maximalists rages on. Both assets offer unique advantages and risks. Ultimately, the choice comes down to individual investment goals and risk tolerance. Section 8. The future of gold. A look ahead at the glistening horizon. Is gold's 2025 rally sustainable? While no one has a crystal ball, the underlying factors driving its ascent suggest this is more than a fleeting trend. Central bank demand, geopolitical uncertainty, and retail investor appetite for gold are likely to persist in the foreseeable future. As we look ahead, gold's role as a safe haven asset and a hedge against inflation appears secure. While its price may fluctuate in the short term, its long-term prospects remain bright. Whether it continues its meteoric rise or experiences periods of consolidation, gold's allure as a store of value is undeniable.